This is the teacher Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. So today we are going to solve the question from ratios, accounting ratios. And this is IGCSE or O levels 7707, IGCSE 0452 accounting. And the topic is ratios. Ratios usually used to come in the paper very often, but from after 2020, it is not a compulsory question anymore. And the complexity of the question has also gone down. It becomes, comes very easy question used to come in the paper. So let's start the question of ratios. I wanted to bring your calculators with you because calculators are a must part of the solution. So let's see. This is question number 5, usually comes now. This question has come in May, June 21-21. So we are going to solve the question from ratios O level 7707 IGCSE 0452 and May, June 21-21 is the variant. So let's see. Omar is a trader. He provided the following information. For the year ended 30th April, credit sales 191,000, credit purchases 1,20,000, gross profit 8220, commission receivable 20280. This is basically commission received. Expenses 29830. At 30th April, trade receivables and trade payables are given at the end of the year. 12,400 and 7,000. Calculate the following ratios. You have to calculate trade receivable turnover ratio. So let me calculate trade receivable turnover ratio for you. So the formula to calculate trade receivable turnover ratio is equal to trade receivable divided by credit sale multiplied by number of days in a year, which is 365. So trade receivable divided by credit sale into number of days in a year, which is 365. You just see the question. Trade receivables are given, that is 12,400. Credit sales is also given in the question, that is going to be 191,000. If credit sale is not mentioned, we will take total sales as credit sales. So 12,400 divided by 191,000, right here, 12,400 divided by 191,000 multiplied by 365. You will get the answer, and the answer will be in days. So please calculate it. If the answer is in days and it is coming in points, you have to round it off. Yes, you have to round it off to the next day. So please calculate for me. 12,400 divided by 1,91,000 into 365. Yes, what is the answer?
So the answer is 23.69.
Okay, so it is going to be 23.69. So you will write that is going to be 24 days. So what does it shows? It shows that in 24 days, we are able to collect the amount from our trade receivables. Yani it takes us 24 days to collect the amount from trade receivables. After 24 days, collection of customers are going to be done after 24 days. Next ratio we are going to calculate, that is trade payable turnover ratio. And the formula for trade payable turnover ratio is trade payable over credit purchases multiplied by number of days in a year, which is normally we used to take it 365. So let's see that what is going to be the amount of trade payables. So trade payables are given, that is 7,000, right? These are the trade payables, 7,000. And the credits purchases are going to be 1,20,000. So credit purchases are going to be 1,20,000. Okay. So let me calculate. 7,000 divided by 1,20,000 divided by 1,20,000. 7,000 is trade payables. 1,20,000 is going to be the credit purchases into 365. So what is the answer? Again, we are going to do it to the round up to the next whole day as written already. Even if it is not written, you have to do that accordingly. So that shows that
So
yes,
the answer is 21.29.
21.29 means 22 days, right? So we are used to make the payment to our trade payables after every 28 days. So it means that it is not beneficial for the business right now, because we are making the payment to trade payables in 22 days while we are receiving the collection from customers in 24 days. It means we are making payment to trade payable quickly, whereas we are collecting the amount from trade receivable after making payment to trade payables. So it doesn't show us that the liquidity position of the business is very good, right? Because we should pay our trade payables after collecting the amount of from trade receivables. So it is always better that we should collect amount from trade receivables earlier than the amount we pay to our trade payables. So this question has come in May, June 21. So I just want to open it again because just the data has been just shifted. So for that reason, I can do undo also, but I just decided to do that in that way. Okay. So credit purchase 1,20,000, trade payable 7,000. We are done with that. Next, the year end 30th April 2021 was Umar's first year of trading. His main competitor is Ahu, who has been trading for many years. Ahu has established a good reputation. The following information relates to Ahu's business for the year ended 30th April 2021. Trade receivable turnover ratio is 36 days, right? And trade payable turnover ratio is 31 days. So Ahu is also making the payment to his trade payables earlier than he is collecting the amount from trade receivable. Uski bhi, if you think that his liquidity position is even not that good, his trade receivable and trade payable ratio is also not that good, but he is giving more time. He is taking more time from trade payables, and he is giving more time to trade receivables also. 22 days, it was 22 days and 24 days for us. 22 days for trade payable turnover ratio, and for Ahu it is 31 days. So he is making the payment 9 days after us. Same is the case, we are collecting the amount from trade receivable in 24 days, but Ahu is collecting the amount from trade receivable in 36 days. So explain two reasons for the difference in the trade receivable turnover ratio of the two businesses. So I've already told you, because of the reason that the amount of trade receivables, because the customers are, or the credit sales will be on the higher side. The credit sales of what should I say? Ahu is on the higher side, right? And he has basically that's why his ratio is credit sales is basically on the lower side. I'm sorry, and trade receivables are on the higher side. That's why we are getting more ratio for trade receivable turnover ratio. Because if in a fraction, if you see the fraction for trade payable, let's suppose trade payable over credit purchases, if is higher, it means that trade payables amount of trade payable is higher. So because he is dealing in bulk, he has large amount of customers and suppliers, right? And the amount of credit purchases is lower into 365. That's why he is basically, the amount is coming 31 days, that is making the payment in 31 days to the. Secondly, the B1 point also suggests that he is basically asking us, yes, the state two reason for the difference in the trade receivable turnover ratio of the two businesses. Okay, so we are basically talking about trade receivables only, not trade payables. I have also shown you. So the trade receivables for Ahu is on the higher side. That is why his trade receivable turnover ratio is more. And the credit sales is on the lower side. Why? Because he was not having much competition at that time. So he was selling more on cash, might be. So that is why it doesn't make any difference to him, even if the trade receivables turnover ratio is higher. It doesn't make any difference to him because he is selling more on cash. So this is how we are going for the difference of the two trade receivables. Let me see. 12,400 and credit sales are 191,000. Yeah, credit sales are lower, simply. State two reason for the difference in trade payable turnover ratio of the two businesses. Again, the same thing. It is 31 and for him it was 22, right? So same thing will apply over here, that trade payables are higher, right? In total amount, he is purchasing the goods on credit. That is why the amount of trade payables for Ahu is higher. trade payable over credit purchases. And credit purchases is on the lower side. Means he is selling again, he is purchasing more on credit and making the payment to the trade payables at a later stage. That is the difference between the two. Whereas if you just see the trade payables are on the lower side, it is only 7,000 and the credit purchases are 1,20,000, which is also not that higher in comparison to credit sales. So he's selling for, he's purchasing goods on credit. Even that the trade payables are not on the higher side. Yeah, for him also it is not on the very much on the higher side. So it means that he is making the trade payables quickly. It is only 7,000, where the credit purchases are 1,20,000. So that is why his trade payable turnover ratio is low, because trade payable comes on the denominator, the amount is less, and the credit purchases, the resultant amount, the denominator amount should be lower, but it is higher. Credit purchases is enough, 120,000. So that's why this is why there is a difference between the trade receivable and trade payable ratio of the two businesses, as discussed with you. Umar wants to increase sales and is considering employing a marketing manager who would be paid $20,000 per annum. Advise Umar whether or not he should employ a marketing manager. Justify your answer. You may include reference to the possible effect on the income and expenses of the business. So that is very good. First of all, marketing manager, if he's employee, obviously he has to go for an advertisement expenditure. So his expense will increase. He has to pay the salary for marketing manager also 28,000. So that will also increase an expense for him. But he might improve, he might be result in an improve in sales. When his sales will increase, obviously his profit will also increase. It will have a good impact, and because he's new in the business, so in order to boom growth, he will get good growth of the business. Future growth of the business is going to be dependent upon the performance of the marketing manager. But he should be skilled enough. It depends that his skills, what his skills is going to bring in his. Now gross profit plus, because I want to find profit. So 80,220 plus 20,280. This is going to be 1,05,000 minus 29,830. Right? So it will become around 70,000. He's getting profit of 70,000, which is, I think, which is quite fine up till now. So he is able to manage the expense of 28,000. He will still be in profit of 42,000, right? And he can even do more advertisement to increase his sales and take a chance to improve the performance of the business. Umar is concerned that an increase in sales would lead to an increase in irrecoverable debts. State 3 ways by which Umar could reduce the possibility of irrecoverable debts. So he can give discount to the credit customers so that they may pay early, quickly, right? Then he can start selling for cash also, including credit, so that bad debts, chances of bad debts should decrease. Secondly, he might charge interest on overdue account. Those customers who are not paying, so we can charge interest on overdue account on those customers who are not paying, so that they should make us the payment. And the third thing, that we should stop selling them. Who the customers who are giving us bad debts, okay, we should stop selling goods to them, or we should start trying to improve our admin department in order to decrease our bad debts, right? This is May, June 21. Next question we are going to solve. Azim is a wholesaler. He sells goods on both cash and credit basis. Terms of business for all credit sales is 30 days. So we used to make the payment in 30 days to the credit customers. Cash sales are given, credit sales are given, credit purchase are given, inventory opening closing is given. Money owed by credit customer means trade receivables at the end. Money owed to credit suppliers means trade payable at the end of the year. You have to calculate inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio. This question has come in October, November 24, 22. Right? October, November 24, 22. This is one of the, you can say, the latest questions which has come in the exam. So that would be more very good for the solution of the, because it has some small parts also. So let's see. October, November 24, 22. First of all, we have to calculate what inventory turnover ratio. The formula to calculate inventory turnover ratio, we have exact idea about that. That is going to be cost of sales divided by average inventory. Let me write here inventory turnover October, November 24, 22. I will write the formula cost of sales divided by average inventory. So I have to calculate cost of sales actually. Opening inventory plus purchases minus closing inventory. So I want you to help me out for this working. Opening inventory at 31st December 2022 because 23 is the closing plus purchases. We should go for all purchases. All purchases are on credit. So 278,429 minus closing inventory is given, that is 25,600. So what is the answer, please tell me, for the cost of sales?
So the answer is 2,76,903.
G, 276,903. Now I have to calculate average inventory, which is opening inventory 24074 plus closing inventory 25,600 divided by 2.
So the answer is 36,874.
36,874. Okay. Now let me solve the question. That is going to be cost of sales. The answer is 276,903 divided by average inventory, which is 36874. So the answer is going to be times, because the answer of inventory turnover ratio will always come in times. So 276,903 divided by 36874. G, what is the answer we'll get? Yes. Next, we are going to calculate is trade receivable turnover. That we have done it last time also. Yes, what is the answer? Trade receivable.
So the answer is 7.5.
Okay. Trade receivable over credit sales into number of days in a year, which is 365. The answer is going to be 7.5 times. So let me write here. 7.5 times is the answer. Now, I will calculate trade receivables are given in the question. Money owed by credit customers 42375. I will write here 42375 divided by credit sales. That is going to be 392,600, 392,600 into 365. Yeah. What is going to be the answer for that? 42375 divided by 392,600 into 365. The answer will come in days.
So the answer is 39.3.
Yes, so we'll write 40 days because we have to convert it to the nearest next whole number. 40 days, yani it takes us 40 days to collect the amount from our trade receivables. Then comes the trade payable turnover ratio. Formula is going to be trade payable over credit purchases into number of days in a year, which is going to be 365. So let's see what are the amount of trade payables. Trade payables are given. They are 21603. So I will write here trade payables 21603 divided by credit purchases. So they are given here 278429. So let me write here 278429 into 365, which is the normal days we used to take in a year. So trade payable over credit purchases into 365. We will get our trade payable turnover ratio. So what is
So the
going to
answer is 28.3.
So we'll write 29 days. So do you think our ratios are good? No, because we'll take some almost 7 to 8 times in a year. We will convert our inventory into sales, right? That's fine. But we are making the payment to our trade payables in 29 days, and then we have to wait for next 11 days to collect the amount from our trade receivables, because our collection period ratio, trade receivable turnover, is 40 days. Oh, and payment period ratio is 29 days, which is not good for the business. We should collect early, we should pay at a later stage. Not very later stage, but at later stage. During the previous year, A.S.M. trade receivable turnover had been 35 days. So it is clearly stated that in the previous year, the trade receivable turnover ratio is 35 days. And he is concerned that this is too high. Now it is 40 days. Previous, it was 35 days. Now it is getting more. We are getting more late to collect the amount from trade receivables. Advice: A.S.M. had been considering using the services of a debt collection company to improve the speed at which he receives his money from his credit customer. Advise A.S.M. whether he should appoint a debt collection company. Justify your answer with 2 advantages and 2 disadvantages. I believe that he should appoint a debt collection company, because definitely he has to pay some amount to them, but he will be able to collect the amount from the trade receivables quickly. Because of second reason is this, that even the trade receivable turnover ratio has increased in this year. 5 days more he's taking, more 5 days, right? So it is getting more problematic for him. Then it might be possible that with debt collection company, because they are obviously skilled in this regard, the bad debts, that irrecoverable debts will also decrease. And he will be able to collect the amount from the trade receivables quickly also. And irrecoverable debts will also decrease, but it might hamper the relation with the customers, right? That is a problem. Then he has to pay some amount to the debt collection company, which will increase its expenses. So profit will obviously decrease in this regard. So I will go for the option that I will take this option to go for the inventory turnover ratio. There are reasons behind also, because he is selling more on credit. You can see cash sales is on the lower side. So because his most of the sales are on credit, and if he is not getting the amount quickly, he will find very difficult to pay the trade payables, and his liquidity position will not improve because of that. It will create problem. So we'll go for the debt collection company. Next is state 2 other measure that A.S.M. might take to reduce his trade receivable turnover period. He should give discount to the customers so that they can collect amount trade receivable. They can charge interest on overdue account who are not paying, so that they can make the payment early. And he can improve the relationship with the customer so that they can pay us quickly. A.S.M. has calculated his gross profit margin and profit margin for the year ended 31st December 2023. He wants to compare these to his competitors, which is Bahir, who has a similar sized business. Gross profit margin is 33% and Bahir is 37%. So it means that for A.S.M., the gross profit margin is 4% more for Bahir. So he is getting more Bahir is getting more gross profit in comparison to his sales, where A.S.M. is getting little less. But is same is the case with profit margin. So it means that A.S.M. is not able to control its expenses properly, right? State 1 action the A.S.M. might take to improve his gross profit margin, right? That is he should increase his sales. He should go more advertisement, right? He should go for a cheaper supplier. He should decrease his cost of sales, increase in sale with the same cost of sales, or decrease in cost of sales with the same sales. His gross profit will increase. But profit margin, definitely for profit margin, what should he needs to do? Because I believe that the profit margin is also on the lower side. Then in order to increase the profit margin, he can he should try to control his expenses. And when the gross profit margin will increase, profit margin might increase also, because increase in sales will result in increase in profit margin, right? So it shows the effectiveness and efficiency of the business will also increase in this regard. Next, during the year ended 31st December, A.S.M. took goods for his own use 340, but had not entered that in his accounting record. To correct this error, A.S.M. made a year-end adjustment, prepared the journal entry that A.S.M. would need to make to correct this error. A narrative is not required. That is goods drawing, and the entry is drawings debit and purchases credit. So for goods drawing, the entry is drawings debit and purchases credit, because the amount will decrease purchases, and whenever you withdraw something from your own, owner will withdraw. That is called as drawings. So drawings debit and purchases credit. Complete the table below. The placing a tick to indicate the effect of correcting this error on Azim's gross profit and closing capital. Drawing to purchases I'm talking about, which is not recorded, right? Correcting the error. So when we'll pass drawings debit and purchases credit, what will we do? Closing capital will decrease, obviously, right? Capital will decrease, right? And the other part is this: if when you purchases is going to be credit, which we haven't done. So it means that हमने purchases को credit करना है, तो profit आपका क्या होगा? Increase कर जाएगा. So gross profit will increase, right? And the other thing is this, that on closing capital, actually gross profit will increase and closing capital will decrease. So overall, there will be no effect on closing capital, right? Closing capital will not be affected. We have not done this particular point yet because we are yet to study the chapter of error. So I won't go into detail of this particular point. It has come in front of me, so I decided to go for it, right? So this is it. We are done with the last part of this chapter. Thank you very much. Inshallah ta'ala, see you in the next